Hello and welcome to my channel. In this video, we will discuss taxation. Taxation refers to the process of imposing compulsory payments on individuals or entities by governments or other authorities. These payments are usually based on the income, expenditure, or wealth of the taxpayers. The payments are involuntary, meaning that the taxpayers have no choice but to comply, and they are unrequited, meaning that they are not paid in exchange for any specific service that the government provides. Governments use taxes for various purposes. Some of the main ones are: to raise revenue. Taxes are the primary source of income for governments. They use this income to finance public goods and services, such as infrastructure, education, healthcare, defense, and social security. Without taxes, governments would not be able to provide these things for their citizens. To redistribute income, taxes can also be used to reduce inequality and poverty in society. By taxing the rich more than the poor, and by providing benefits and subsidies to the poor and needy, governments can transfer wealth from the haves to the have-nots and improve social welfare. To correct externalities, taxes can also be used to address the effects of an economic activity on third parties who are not involved in the transaction. For example, governments may tax pollution, tobacco, or alcohol to reduce their negative impacts on others and the environment. To influence behavior, taxes can also be used to encourage or discourage certain actions or choices by individuals or businesses. For example, governments may tax savings or investment to stimulate economic growth, or tax unhealthy foods or sugary drinks to promote public health. But taxes are not always good. They can also have negative effects, such as lower incentives. Taxes can reduce the motivation and reward for working, saving, investing, or consuming. This can lower economic efficiency and growth. For example, if you have to pay a high income tax on your earnings, you may work less or avoid paying taxes altogether. Higher costs. Taxes can increase the cost of production or consumption of goods and services. This can lower the quantity and quality of goods and services available in the market. For example, if you have to pay a high sales tax on a product, you may buy less of it or switch to a cheaper alternative. Deadweight loss. Taxes can also create a deadweight loss, which is a loss of economic welfare that is not compensated by any gain for anyone. This happens when taxes distort the market equilibrium and create excess burden for buyers or sellers. For example, if you have to pay a high tax on gasoline, you may drive less or use public transportation instead. This reduces your utility and the producer's profit without generating any benefit for anyone else. Therefore, taxation is a complex and controversial topic in economics. It can have both positive and negative effects depending on who you ask and what you measure. The debate over how much and how to tax still rages on. We hope this video helped you understand what taxation is and why it matters for economic decisions. If you like this video, please give it a thumbs up and subscribe to this channel for more economics videos. Thank you for watching and we will see you next time.